Oops, wrong one. Turn this off. There we go. There we go. Let me know if we're getting some audio. Are we getting some audio? There we go. There's some audio right there. Cool. We got audio coming in. And turn that on. Turn these off. Turn on the music, of course. Alrighty, let me get the chat pulled up right here. Slash, what's up, man? How's it going? What up, Lydia? Good to see you. Thanks for stopping by. How was your portfolio today? Ooh, I don't even know. I think I was up a few bucks. On Robinhood specifically, I was up about like $4. Wow, why am I trying to... Yeah, I was up $4. Snapchat has almost fully recovered off that swing for me. And then I'll be capitalizing on some profit. So that'll be nice. But we'll see what tomorrow holds. Let me get this muted for myself. And then my other accounts, I don't really check those every day, but I could take a look, I guess. Let me see. I think probably all of them were up. It doesn't really, like, obviously on like Stash, it doesn't really give you like a daily breakdown. So, and Acorns, I'm sure was up if everything else was up. Usually when Robinhood's up, everybody else is up too. So, how about you? I almost recovered everything from last week. Yeah, sup, bro? The Investors Channel. What's up, dude? How's it going? Thanks for stopping by. I appreciate that. On Stash, I was up for sure. That's awesome. Yeah, so that's kind of how the profile did today. I don't really like Stash, Acorns, M1 Finance. Stash is probably the hardest one to track daily. Each like Robinhood tells you the daily gains and losses, and also M1 does along with Robinhood, but Stash doesn't really tell you the daily gain and loss. So that's kind of a little bit irritating, but I mean, it is what it is. It's a long-term investing app, so it would make sense that they don't like specifically just tell you how much you went down or up. But it is what it is, right? Just trying to get some music in my ears. Cool. Today we're going to be talking about two different things. We're going to be talking about 2008. There was an article that I found actually recently about I think it was written today. The title of it is "Investors Have Learned Squat 10 Years After the..." Let me get this chat out of the way. After the Lehman Brothers bankruptcy. So I don't know really much about the 2008 crash because I wasn't really an investor back then. I was only 18. So it's kind of like, you know, what is it? But after reading this, it's kind of interesting. Kind of like a look back, and him kind of just I guess kind of like reminiscing about what it was like during that September 15, 2008, when the Lehman Brothers went bankrupt, and how I guess we're kind of moving into that era, maybe potentially. And that we really didn't learn anything. We're still doing the same exact thing that we did back then, which I can totally agree, because why would you change if it was working back then? Like, investors are like that. Like, they're not going to, and that's the way people are. Like, even if it was bad business practice that like caused it, like they probably didn't lose that much money, so they're going to continue to do it. You know what I'm saying? So that's all I'm going to say about that. We'll go ahead and jump into that article here in just a second. Just continuing on with the stream real quick. I invested pretty heavy into international, so I expect that I won't do well for a while, but probably will do better in the longer time frame. Yeah, they were saying that. I was seeing a few articles that were talking about how pretty much the price, the trade wars. I think it was Jim Cramer that was saying. Jim Cramer was saying that the technicals might say that the trade war is almost finished and that we're going to be moving into back to normal again or something like that. So it's interesting. I wish Robinhood had fractional shares. Me too, but I also like the buying full shares because it seems like for me with fractional shares is they only do it based upon the amount of money that you have invested. Like, so I sold off some of my stock. Well, I transferred stock from I have M1 and I transferred one equities from one pie to the another, and because it's only money, you can't sell like say sell all shares. There's no like sell all button. It's literally like sell this amount of money, and if you wake up tomorrow morning and the price is higher than that, then obviously it doesn't sell that portion of the stock. So it's really kind of confusing the way that it actually works out with fractional shares, and that's the way that Stash is too. It's not, you can't be like, I want to sell 5 shares because I own 5 shares. It's like you have to sell, like say even you owned, we'll say Apple, I think it's trading at like 220-ish. Say it's like 220, we'll say it's 200. Say you have 5 shares of it. So you have $1,000 worth. Well, you have to go say sell $1,000 worth of Apple. You can't just go say I want to sell all 5 shares or sell all my shares, sell everything. You can't say that on Stash or on M1 or on Acorns. It's literally an amount of money. Yeah, the China market is down. I only have IQ, but I may get more China stocks. Yep, Alibaba. Yep, I'm a holder in them. They're in my M1 pie for sure. I've been watching Baba. The price looks very attractive. A lot of value investors like Alibaba at the price that it is right now. I've seen a lot of articles that like that price. Yo, what up, Stony Hydra? 15,140. How's it going? Coming over from Mixer. I appreciate the follow over on Mixer. I like that. I'm exposed through VXUS valuations. Yeah. 30% discount are looking good. Yes. No, they international stocks are looking very, very attractive. I've heard some bad things about JD.com. But Baba, I guess, is like still pretty strong. I think that there's also a little bit of turmoil because the Alibaba CEO, or the guy that was like leading the charge, is stepping down to go do philanthropy. And I mean, I totally understand. That's like Mark Zuckerberg, same kind of thing. Like once you've made it, like it's like, what is there? What more can I do in life besides like go help other people? Once you've had a certain level of success, it's like I can't do anything else but go help other people, because that's literally like maybe the point of their life or whatever, you know? So, yeah, JD tanked. Yeah, that's what I heard. I haven't really looked at JD stock, so I don't know much. I just read like the headlines and I'm like, ooh, that doesn't sound good for stock price. It's like, ooh, that doesn't sound good. Like, ooh, that doesn't sound good. So I don't know what's going to happen with Baba moving forward, but I'm still holding him. And we'll see. We'll see what happens. But let's go ahead and we're going to, so what I was saying was we're going to cover that article, and then we're also going to jump into, I watched a video on Facebook actually recently. I think one of my friends shared it, or one of the groups that I'm a part of shared it. It was talking about like Grant Cardone. For these guys who don't know, he's like a real estate investor plus salesman, like hardcore salesman. And so he does like, he sells courses on how to sell. It's kind of funny, but he had posted a video, basically five things you need to do to become a millionaire, basically. And so I was just gonna, like, for this video, I was gonna share yeah, JD stock. That's right. The CEO was some scandal or something like that. I remember seeing. I don't remember specifically, but I heard that. Yeah, I think it was like some like I think it was pretty bad. Like I think it was like sexual or something kind of scandal. When companies I like tank, I get happy. It creates an opportunity to buy. For sure. For sure. I totally agree with you there. That's why I've been buying a lot of gold. A lot of gold companies, a lot of gold and silver companies lately. Because boys, that been dropping like a rock. Yeah. So anyways, he came out with his video probably about 3 months ago about his top 5 like tips, strategies to become a millionaire. And so I was just going to give my thoughts on it because he brings up some valid points in the actual video. And then I feel like at some point it's unrealistic. And so I kind of just wanted to share my thoughts on it, kind of share a little bit about what the video is about, and then also share my thoughts on it. So I'm pretty excited to share that kind of stuff. Also, so I do plan on maybe like giving thoughts on a few videos that I found, like financial investing kind of videos that I found on just the interwebs or different articles, that kind of thing. But yeah, we'll see, because I feel like with like apps and stuff like that, it's like I can only come out with a certain number of like how to do this with using Stash, or how to do this with using Stash, or with using M1. And it's like I don't want to get into stock picking, because I don't want people to buy a stock because I say like my top three stocks for this month, and it's like, okay, like, well, like I don't want someone just go like, Coach said that this would be a good stock, and it didn't work out that well. Like I would just be like, top 3 stocks this month: Apple, Amazon, and Microsoft. I don't know. Does it really matter? Amazon, Apple, Google, Fang, Facebook, Apple, Netflix, Google. Or you want to add the other in there: Fang, Facebook, Apple, Amazon, Netflix, Google. Like, that's all. But yeah, let's just go ahead and jump into the article. How about that? That works for me. Let's go ahead. Well, I'm already here at the computer, and it's, you know, not worth the time to fire stuff up. So let's just go ahead and jump into it right now. Okay, that's not a text message. That's a boy. He's all about leveraging debt 10x. Yeah, it's funny, man. In his video, he talks about debt. I'll address it right after. But yeah, he does talk about debt in his video. And I was telling my wife, I was like, watching that video made my brain hurt a little bit when he talked about debt, because somebody asked him, they're like, which I'll get into it a little bit more, but basically one of his points was like, you know, you want to save about 40% of your gross income. And somebody was like, so should I pay off debt first? Is that a form of like saving money? And he was like, don't worry about the past. Like, and I was like, don't worry about the past. Like, so that means like forget the debt, like, and it'll just again get paid off. And he's like, you don't need to worry about your credit score. And I'm like, okay, I'm following, because like you'll be rich and you won't need credit score or whatever. But it was like my brain still hurts. Like, I don't understand that. I was like, I might need him to expound upon that specific thing, because I'm still confused. But yeah, I've read his book 10x. It's very, I like the idea behind it, but I don't think it's the most practical thing. Like, but I understand what he's getting at is that people's, wow, it's kind of like laggy. Do you guys notice that? But what I was saying is that it seems like his expectation, like people's expectations, they always sell themselves short. So for instance, if I wanted to have a YouTube channel that had like, I don't know, we'll say 10,000 subscribers. And it was like, I want to have 10,000 subscribers, and here's what I'm doing today to get there. And it's like, look, like you need to act like you're trying to get 10x that. So for me, it would be 100,000 subscribers. I need to act like I'm going for 100,000 subscribers and put the amount of work in that it will take for me to get to 100,000 subscribers. So that way I can probably achieve that 10,000 subs or even more, maybe. So I totally like understand that, because I think a lot of people, when they have expectations, they sell themselves short. Could Alibaba gain with partnership with Russia? I mean, that's possible, yeah. I don't know if China would like that, if they gained a partnership with Russia. But I mean, we live in a global economy anyway, so it's kind of like wherever you get your money, wherever, you know. But let's go ahead and jump into the article. Let me go ahead and hit the record button real quick. Hey, what's up, everybody? Welcome to the live stream, or if you're new, watching at a later date, this will be known as Keith Condensed, basically a little cutout of the live stream that I just pull out and kind of put back up online. So that way, you know, everybody can kind of stay informed of what's going on in the market. Typically, these videos might be uploaded about 3 to 4 days later than the actual date. And so, hey, that's what you get for missing the live stream, right? Anyways, feel free to join me on the live stream where I give away half an ounce of silver every single week to the person that's the most KCoin. And I know you're sitting around like, what the heck is KCoin? Come to the live stream and figure it out. It's an open invitation, basically. I live stream 5 days a week, every day of the week, except for Wednesday night. And then I also stream on Saturday around like 9-ish, 9-ish o'clock Pacific Standard Time. Anyways, let's go ahead and jump into it. So this article comes from The Street. The title of the article is Investors Have Learned Squat 10 Years After the Lehman Brothers Bankruptcy. So basically in 2008, on September 15th, the Lehman Brothers went bankrupt. And I guess this was like an iconic, again, kind of like preface this real quickly. I wasn't an investor in 2008. I was barely finishing up school, barely finishing up, to be more specific, high school. And then actually at this point, I was just starting to go to college, which probably was the worst thing that I could have done at that point. I should have been taking the money that I was getting in loans and probably investing it into the market. I should have been an investor in 2008. And a lot of people would be like, yo, coach, you a genius for investing in 2008. How'd you know? And I'd be like, just kind of wanted to invest my money back then, but I couldn't invest it because I didn't have enough to invest. Because there wasn't things like Stash, Acorns, Robinhood, M1 Finance. So basically in the article, he was getting at it's about a Wall Street analyst who oh man, what the heck is going on there? Okay, there we go. It was basically about a Wall Street analyst who's kind of just reminiscing about what had happened on September 15th, 2008, and he was saying, you know, he was like, basically, you know, you hear every single day, you hear everybody talk about it, long-term investors, short-term investors, buy low, sell high, buy low, sell high. He was like, well, this day was not the buy low, sell high kind of day. Like, he was like, I've seen big drops before, and we always just kept on buying those, like, dips. He was like, but this day was not a buy low, sell high kind of day. He was like, this was it's going to get lower and sell as much as you can. Get out as fast as you can. And basically he gets to the point where he was talking about how, like, he was so frustrated, so emotional that he just wanted to, like, pound his head against the, like, table, as what I think he alluded to. And so he went out to take a walk, just a walk down Wall Street. And he was like, everything was normal. Like, people were taking pictures, people were strolling, people were talking, just like they normally would. However, what they didn't realize was that there was basically an economic crisis. And it was like nobody knew about it. Like, he knew, but like everybody else in the public was like, well, like, this guy's just kind of weird. Like, I mean, I'm sure that he was walking around normal, but it was kind of like one of those things, like, nobody knew what was happening to the economy. Nobody knew what was happening to their investments at that, like, time. Like, literally the market had just dropped, and it was like, he was like it's time to wake up. Like, how do you guys not know about this? And so anyways, he gets further down into about how we've pretty much as investors have learned nothing from what happened in 2008 with the financial crisis that had happened there. Basically, he talks about how we don't take time to go and look at companies' financial statements, learn how to read a cash flow statement to see if a company is actually a viable company and something that we should be investing into. We typically invest off of momentum, off of hype. And in here he also talks about leveraging. He said, you know, nobody's really leveraging right now. I mean, they're starting to. He's like, but if you think about it at the general population level, I think in here, let me find it real quick. Yeah, just take a gander at the consumer credit card or the consumer credit data in 2 years of strong home remodeling demand fueled by low interest rates. So people are leveraging their basically investment into their house. So they're taking on debt, leverage to reinvest that back into their house, hopefully to, you know, increase the value of it. And then second of all, retail sales have come on strong too. As people consume the hottest tech gadgets and jeans, most tech stocks have gone through the roof without any consideration on valuation. People are simply riding momentum because everyone else is, and they don't know how to read a cash flow statement. And I like personally, like this, when I read this, like it kind of makes my brain hurt. Like it kind of makes, it really does, like it doesn't make sense, because I'm like, how could you invest into a company solely on like speculation and no factual information? Like it's just like, hey, this stock looks like it's getting momentum, like we're gonna go ahead and throw our money in it. And it's like, yeah, we made money, like great, thumbs up, like for sure for you. But it's like, then it drops and you're like, wait, the momentum shifted, like what happened? All in a day's work, all in a day's work. And so I think, like as an investor, it's important to, I guess, open up some books and start trying to figure out how to read cash flow statements, start figuring out how to read financial statements, start figuring out what makes a stock, what makes a company a good company, and what makes a company lasting company maybe for the next 10 to 15 years. What makes a company a recession-proof company? I would say those are all good things to consider. And if you don't have the answer, then gosh, you probably should go figure out those answers, right? I hope that some of my videos will help you figure that out, but for the most part, you got to continue to do your own research and really, really leave no stone unturned. But I think that for me, like, I guess when I hear this, like, I don't think that I necessarily learned from the 2008 Lehman bankruptcy, because I wasn't around in investing then. And so for me, I would have to go back and look at how that all played out, and emotionally I wouldn't be filled by the same emotions that existed at that point in time. I remember one of my buddies talking about it. He was like, guys were walking out of work because their 10K or their 401k had basically dropped so much, and they were like, I literally, like, he's like, I've seen grown men I saw grown men cry in 2008. And it was like, he was like, what the heck? Like, they just got up and walked out and they said, forget this, I don't know if I'm coming back. So that's all I got to say. Like, as emotional as it gets, like, I don't know what that is like, but I guess I could go from the logical side and program some rules, some principles in that could take what happened in 2008 and apply those principles from 2008 to my account, maybe to set me up moving into the future. Anyways, it's your boy, Coach Keith. Thank you for watching. I really appreciate it. Peace out. Yo, I'm still here, guys. I'm not going anywhere. I'm just how I gotta end the recording, you know. One like it up for sure. Thanks, gestures. Gotta go back to my stream, coach, but wanted to come by and like and say hi. Yo, thanks, man. I've been enjoying watching you play Destiny. I have really been enjoying watching you play. It seems like that's kind of like your bread and butter kind of game. Like that's like similar to like a Halo 5, like really kind of like, that's for me, like when I watch you play, like that seems like the kind of game that you really enjoy, and it seems, honestly, that's your bread, butter, and honey. You know what I'm saying? Anyways, I can't believe I just said that. Let me just scroll back up real quick. Could Alibaba game with partnership? And you know what we were talking about? We were talking about something else. 10x, I think we were talking about. Yeah. Okay, cool. And I think I pretty much addressed the debt thing that he was talking about for the most part. So, let's go ahead and gotta go back. Okay, so he's already left. That's good to hear, man. I've been loving it too. Yes. Well, man, get back to your stream. Enjoy over there. Keep the audience involved, man. Do your thing. You know what I'm saying? You got it. You got it for sure. I'm going to go ahead and fire up these cameras real quick, and we will go ahead and let me get my script pulled up too also. Put that there. Actually, I want to put that on this one. But I need to pull up one more thing real quick. One more program before I get into it. Yes, this is my game. Haha, been getting good views too, man. Can't wait for Blackout on Friday. Honestly, might pull an all-nighter and stream all night. Dang! you're pretty stoked about that then. A lot of people, from what I've been seeing, man, a lot of people are so stoked about it. I hope that it actually lives up to the hype, because like it would be a total letdown if it didn't, but I hope that it does, because that would be really, really good for Call of Duty and the Activision brand. Thoughts on Grant Cardone's 5 steps to be a millionaire? It's funny because he talks about his 5 steps, but there's only 4 steps. All right, cool. That's up. Let me go fire up these cameras, and then I'll be right back. All right, give me 3 minutes. Until then, enjoy some music on me. Still live in 20 minutes. I'll be back. I might not. I don't know. I needed to get to bed, man. I like 7 o'clock tonight. I basically like crashed out. Actually, like 6:30. Like I was literally so tired that I wanted to fall asleep, but I couldn't because I had to go to a meeting, so I couldn't like go to sleep. But I really, really wanted to. Let me move this over here. I think eventually I just might leave the computer in the actual recording, but for right now I don't think I'm ready for people. I don't think I'm ready for people to know that I'm actually reading off a script, even though half the video, like I'm like looking at a screen. You know what I'm saying? Reading report wouldn't help you with Lehman Bros. They moved around money internationally to give that they were. Yeah, that's what like to hide that they were in bad shape. That's what I was thinking too. That's what I was thinking too, but like I was like, I'm pretty like I'm like that's what I was like I'm pretty sure that there was some sketchy business going on, and it wasn't just like reading cash flow statements and that kind of thing, that everything was all hunky dory. Like I'm pretty sure that they were doing some sketchy business as well. So thanks for queuing me in. Slash, like I said, I would have to go research, because I literally have not done. Besides like reading like what adversely affects when a recession happens and all that kind of stuff, like I wouldn't have much clued in with the 2008 recession. Like I didn't even watch. I think that there was a documentary that came out on how people made money during 2008 and like how people walked away with money or whatever. But I haven't watched that. Like I wish that I had more time to like do just stock stuff, but like I don't. So very, very basic level. I would say not basic, but I understand quite a bit, but some stuff I just don't have time to look into. Anyways, let's go ahead. You guys ready to jump into it? Let's go ahead and just jump right into it. Hey, what's up, everybody? Welcome to episode number 185 here on season number 2. And today we are getting into my thoughts on Grant Cardone's 5 steps to be a millionaire. So these videos are meant for educational purposes only and not meant to be taken as financial advice, but you are responsible for your assets and to properly protect them. So always, please, do your own research. The Big Short is about that recession. I mean, everybody tries to short. That would be nice to short a recession. I think that what they did was they bought insurance or something like that, or options, I think, or something along those lines. And that's the people that walked away with the most money, is that they had insurance against the stock market crash or against the housing crash or something like that. And those were basically the people that walked away with tons of money. And it was like literally like no risk and huge amount of reward. So yeah, they knew that was coming. Like it was obvious. Like it was, people saw it coming. For I think the people that were on the other side that I don't know. I don't know much about it. Like I said, I was only an 18-year-old, so I don't even know what that actually meant. The movie Big Short. Oh, okay. Yeah, I'll have to take a look at that. I think that's what my brother was telling me. Yeah. Okay. Okay, that makes more sense now. I was like, The Big Short is about that recession. Yes, I believe so. Yes. Correct. The documentary. Okay, cool. I'll have to check it out, but I'm pretty sure that that's the one that is about the 2008 recession for sure. Totally got sidetracked. Anyways, let's go ahead and bring it back on. So, Grant Cardone came out recently with a video where he gives his sales team 5 steps on what it takes to be a millionaire. To kind of like retrack a little bit, this video was actually published on June 7th of this year, so it's, I would say, about 3 months old as of right now. However, in this video, he has 5 steps where, you know, you have a target, you turn up the income, you go broke investing, and then you make that passive income. And his 5th step, well, I guess it's like repeat or revisit your goals or redo them or something. He doesn't really have a 5th step. Like he on the whiteboard, if you look, like he has 4 steps. Like it's like 1, 2, 3, 4, and then there is no 5th. Like he never puts a 5th, and I don't know why. He titled it 5 steps because it's only 4 steps. So maybe like that's what most people use as 5 steps, but yeah, only 4 steps right there. But basically, like the whole, like, kind of like just to run you through like a quick summary of what he talks about. Basically, he starts out with people having a goal, you know, to be a millionaire, only have $1 million saved up in their account, and basically they say, if only I had a $1 million, like I could quit my job and make it on my own. And basically, he claimed that, you know, that $1 million at $4,000 a month would last you about 25 years or so. So at 27, you would be able to live on $4,000 every single month up until the age of 52, and then at 52 you would have no money. The account would be completely zilch, not there. Which I completely agree with him based upon the circumstances that he gave. However, later on in his speech, he does allude to investing your money, but does not take the investment returns off that $1 million into consideration when talking about the specific $1 million lasting you 25 years. So I'm like kind of a little bit confused because like investing for him is kind of a big thing, and he never like says like, well, if you invested at $1 million, you would make, you know, maybe like a 4% return the next year, $40,000, and then $40,000 the next year, and $40,000 the next year. And if you could live on $40,000 a year, well, then maybe you could make it comfortably. However, you got to take into consideration inflation also, so it's not all that much, but at least your money's kind of making you a little bit more money year over year. So it would definitely prolong how long that $1 million would last. But basically, he says that in order to live a stress-free life, you will need to do, well, the Grant Cardone thing to 10x. So you'll need $10 million. So by this, he means that you need to set the goal high and believe and work to make that goal happen. He says then in order to reach that goal of $10 million, you need to save 40% of your gross income. And I said gross, not your net. So not comes out. So what comes out before taxes? What is there before taxes, not what is there after taxes? He basically says that if you make like $10,000 a month, save or store $4,000 of it, pay $4,000 to the IRS each month, and then you have basically about $2,000 to live on. Which, I mean, in where I live, $2,000 would, you know, not be enough. And then so he's like, okay, well then turn it up to make $20,000 a month, right? Make, you know, $240,000 a year. How many of you guys will make $240,000 a year? Probably not many. Okay, but anyways, he says then, you know, you could go ahead and save 8,000 of it. Go ahead and pay the IRS 8,000, and then from there live on $4,000 a month, and that might be a little bit more comfortable for people to do. However, my question, like I'm sure most of you guys, is like, how? Right? Like, how am I supposed to make $20,000 every single month? And then go ahead and only live off 4,000 of that? Like, are you crazy, man? Are you crazy? Are you seriously crazy? Then third, you have to invest the money that you stored. So the $4,000 that you've been saving basically off that $10,000 that you were getting paid monthly, you have to store 4,000 of it. Well, you have to invest it. He has a personal bias for real estate, which I completely understand why, but I'm not totally into real estate like he is. But I agree that basically money in the bank will basically just disappear. Like, given inflation, given the return that you get paid in the form of interest, and then given the ease of just transferring from one account to the next, that money will just be gone before you know it. So put it away in investments. He likes tangible things. He likes things that pay monthly. That's why he likes real estate, which I'm totally like, go for it. And he does talk about like AT&T stock and also Twitter and Google, and why he wouldn't buy Google because they don't pay a dividend, and why he doesn't buy AT&T because they don't pay a dividend each month. They pay it quarterly, which most companies do. And he basically says that AT&T, off what you pay them, they make tons of money in that quarter, and then they go ahead and pay you just a little bit of what they actually make. He said it would be nice if they paid you monthly. And then fourth, and at that point, like with investing, he basically says that you need to get to about $100,000 before you go look for your first, I think, rental property or your first investment property or something like that. He says that like it's not a good idea to invest in or to have anything less than that, which I'm like, gosh, man, $100,000, like it might take people years to get there unless they're doing it the 10x way. Fourth, in regards to passive income, you need to get to a point where your passive income per month is the same or more than what your gross monthly income is at your job or what you make before you had that passive income. So he says at that point, when your monthly income from your investments makes you about the same as your job, he says at that point you pretty much have made it, more or less. Like he's like, then you could show up to work and grind and hustle your butt off if you want to, and if you don't want to, then by all means, like, you don't have to, kind of thing. So no doubt are these four like huge mountains of a task to like get over. However, I do agree with him to some degree. Like, for the average person, $1 million is not enough money, and I think he does make a good point for that. Even given the interest, it could go away in an instant, and then you would be left going back to basically the daily grind. Like he said, you know, if you have like, well, heaven forbid, but maybe you have like a car accident, someone in your family gets some medical issues, cancer, heaven forbid, but like think about how much money you might be expending for that on top of what the $4,000 of expenses already. And he said then it could dwindle even faster, and I completely agree with him there. So there might be a better means of getting a bigger account. Obviously the bigger the account, the safer you'll be set up moving into the future. And I would also agree with him, like I just said, that a person with $10 million in the bank compared to a person with $1 million is going to have a lot more peace of mind than the person with $1 million, for sure. But the strategy of getting there, I mean, gosh, 40% of your gross income, for most people, that seems completely outrageous. And I think for most, honestly, it probably is at this current state. It's like, what do I do? For me, like, it's like, what do I do? Work a second full-time job on top of what I already do right now? And then, like, where do I sleep? Like, where does my health go? Like, Do I just toss all that to the side for the next 20 years and say, like, so be it, like, we'll see where I'm at in 40 years or 20 years if I'm good health, and hopefully I'll be able to make it for the next 40 years after I've done hustled my butt off for the last 20. Like, how is that even possible? And I think what he's trying to get people to do is shift the mindset of, you know, just working the 40-hour work week into looking at how you can open up other streams of income, like doing online stuff. I mean, honestly, I don't really know. And I feel like most people don't actually think that way. They're like, hey, you know what? I show up for my job, I can save a little bit because I make a little bit here. And I think that everybody's level of saving, every level of investing is going to look different for each and every specific person. Like, I think that really when it comes down to it, I think he wants people to quit their job and have a larger stream of income, but that involves risk also, right? So it's like start a side hustle maybe in hopes that that will turn into a full-time hustle. I mean, I don't really know. I guess kind of maybe my second idea would be to cut out a lot of expenses to drop the income that's needed for your monthly bills, food, whatever it is. Try to cut that down so that way you can start saving additionally into your stores or your investments or whatever. But then my question would be, like, could you really cut that to 40% so that you could be saving 40% of your gross income? I don't know. For me, it still seems impossible. However, I think that he does honestly have some very, very good principles. I think, like, set scary goals, have a plan on how you will reach that goal, and then what the goal looks like when you get there. Like, that is pretty much the idea and concept. Like, he has, like, set the scary goal of $10 million. The plan on how you're going to get there is by saving 40% of your gross income each month and then reinvesting that once you have a certain amount. And what that looks like, the end result of what that looks like, is being able to live off that money, getting paid from your passive income the same amount of money as you currently do at your job. And so you can basically do both, thus combining it and making even more and more and more money. For me right now, though, we can only do about 10 to 20% of what we actually make. Into the future, I mean, I would strive to obviously save or invest as much as possible. But for right now, this is a good place for us to be at. Me and my wife have talked about it, or my wife and I have talked about it, and right now it's a good place for us to be at. However, I think the thing that I enjoyed the most about the entire video was how sobering it was to, like, think that, you know, you always think about, oh, what it would be like to get there, but, like, you can't just settle because everybody else is settling. It's like you can always do better, you can always set the goal higher, you can always try to work harder and hustle, but, like, while everybody else is settling, like, maybe you could be the person to not settle and get that 10x growth. Anyways, we'll go ahead and leave right there. Let's jump to the question of the day, which is, if you could replace the handshake as a greeting with interesting new greeting, what would you replace it with? And I would probably do it like a heel click, where you, like, click your heels together with the next person. So, like, you just walk up to them and you're just like, I wish I could show you on stream, but basically, you know, you take your foot in the back of their foot and you just, like, click them together, and it's like, what up, dude? I don't know. What the heck? Really? Like, you think that would actually work? Anyways, like I was saying, if you got a question regarding Stash, Acorns, Robinhood, M1 Finance, as well as general investing, business, Etsy, coaching, post those questions down below. Don't forget to subscribe right up here. Check out these two videos right here in the link. And as always, thank you for watching. I really appreciate it. All right, let me go ahead and stop this real quick. I did see a lot of new people commenting in the stream for sure. Let me just go ahead and get this exported and get this camera turned off real quick. And I'll move this into me real quick. This is going to be such a long video to edit, man. I have so much to say. I'll be right back. Let's go up. Let's go up. Scrolling back up on the feed, guys, real quick. No, I wanted to bring it up because it's kind of controversial for sure. So I know that I was going to get some good feedback on the stream. Reading a report wouldn't help with you. Yeah, had that. Big Short talked about that. The Trinity study shows that a 4% withdrawal rate will last 30 years, and that is conservative. You can probably withdraw more for sure. Yeah, I couldn't save 40% of my. Yo, what up, XXEVAD36XX? Coming over from Mixer. How's it going, dude? I don't know if you're still watching, but welcome and hello and goodbye or something like that. Anyways, I couldn't save 40% of my gross income. That is less than my living cost if I subtracted it from my net. Yeah, I know, right? That's what I was saying. I was like, wait, so he's sitting around, like, I was watching the video, and they were like, right now, this guy's like, right now I'm saving 40% of my income. And I was like, bro, there's no way, man. Like, you gotta be making so much, bro. Like, he was living in, they're talking, his office is down in Miami. I was like, bro, you gotta be making so much. Like, are you really? Or are you guys, like, just faking it? You know what I mean? I'll save 60%. Congrats. You must have a high income, much higher than medium. No, I don't actually just share a room, which allows me to save more. Yeah, I mean, if like, I would say if you don't have a family, if you're single, if you don't have that much expenses, then that was kind of my point, like cutting your expenses. Like for you, I would say it is easier because you get to cut expenses because you do share a room. So that's cutting basically your rent. Say your rent was $1,000. We'll say it's $2,000. Even if it wasn't, it was $2,000 and you share a room. That's cutting it in half. That means what you need to pay per month goes from $2,000 down to $1,000. Boom. Like there's an easy way to cut expenses is, share a room kind of thing for sure. And most people, like, that's what I was getting to. Most people, it's still probably impossible because if you have a family or whatever it is, like, it's not like, hey, we could just open up our house and go share a room. Like, my wife and I would just not do that. Like, it just would. I would say for a season it could happen, but we wouldn't like just completely like live with someone else in our room. You know what I mean? Like it just we need our privacy for reasons. Yeah, that's one way to do it for sure. Like easily a good way to cut. Almost like pretty much rent is like one of people's biggest expenses. So if you can do that, like by all means. And I would just say keep it up, man. 60%, that's awesome. Like keep on going. Especially if you don't need the money, like just do your thing. The Investors Channel will be over there laughing. I see you, man. You know what I mean? No, we shouldn't be talking. I shouldn't have said that. I'm probably gonna get slapped later. I wasn't talking about that, guys. I was talking about talking. Come on. She's a massage therapist. Come on, guys. I gotta have my personal massage space. She gives also massages at our house sometimes, and so they want to they gotta have privacy too. They don't want just a roommate walking in. Are you kidding me? Anyways, a little authentic open up right there. Now she's a very, very good massage therapist. Holistic health practitioner. I wish that she would come on though and talk about being what being a massage therapist is and all that kind of stuff. Because like you like a lot of people say like, oh man, you're lucky like that she's a massage therapist. Like by all means, like I know that I am lucky, but like a lot of people think like, oh man, you must get massages all the time. Like think about this. Like I don't know what you guys do for work, but we'll say that hey, you do for work, you would you say install, we'll say that you're a plumber, right? Just for all name's sake, you're a plumber. Well, you go out all day, you work 8 hours, 10 hours, 12 hours doing plumbing work, right? Installing copper pipes, doing welding, whatever it may be, plunging toilets, snaking lines, whatever it is, digging holes, whatever the plumbing, you have to do at that point in time. Well, you get home from doing plumbing all day, and your wife walks up to you and goes, "Honey, you're a plumber, right?" And you go, "Of course." What do you say? You say, "Yeah." And she goes, "Our toilet, it's not been flushing correctly. Can you take a look at it and fix it?" You're going to be like, "Oh my gosh, are you kidding me? Like, I literally do this all day. Like, can't we just call a plumber over to have this done?" Like, you think and she's like, "Well, I bet you loved your job." And it's like, yeah, I love my job, but I don't want to just do plumbing every waking moment of my life. I want to take a break. And it's like, oh, okay. Like, so that's kind of the way that, like, I have to look at it when it comes to her, like, being a massage therapist, being a holistic health practitioner. Like, she absolutely is phenomenal at her job. She loves it, and she loves, like, helping people, but it's like she don't want to do it all the time. And so when she comes home, it's like, don't come home and expect her to do more work than she's already just done at work. You know what I'm saying? And so kind of finding that balance. Like, she loves giving me massages, like, by all means, but she's kind of like, if you want a massage, just schedule one at the office kind of thing. And we'll keep home kind of like the safe place where work doesn't have to happen. So I totally agree. And yeah, so just kind of an interesting thing. It's like being a YouTuber and coming home and being like, "Yeah, let's do more videos." It's like, "Oh no, I don't want to make more videos. No, I don't. Let's edit more videos." It's like, "No, I don't want to edit. I don't want to edit. Like, I don't want to do that. I don't want to do that." Not that I don't like to. Not right now. I need a break. So yeah, that's kind of the insight into what it is. It's lucky. I know that in like 30 years from now, like when she doesn't do massage therapy anymore, like, I'll be a blessed man for sure, because I know that she'll want to still work on people, and so I'll be the first one in line being like, "Yo, babe, the shoulders, they're a little bit tight today." But it's all good. It's all good for sure. Well, real quick update. Yesterday I talked about M1, kind of like a hack to transferring equities. Everything pretty much went okay. The only issue is that the one of my equities dropped a little bit, and so the sell price, I think I was sold at like 58.64, but the actual sell price was, I think, like 58.30 or something like that. So my buy was 50. So I bought 30 more cents of that stock. So it wasn't a straight transfer, but it was almost pretty close. Like, that's the way that it works. Yeah, working in technology, people want computer help. Exactly. And you're like, I don't want help. Like, I don't want to help. So, zang. That's the way that I feel, because, like, for me, like, I'm kind of like a jack of all trades every now and again. So, like, because with woodworking, like, I operate in like the 3D CAD stuff, and so it's like, hey, can you do this? And it's like, also, Zhang is the successor of Alibaba. Okay, well, I'll have to do some more research into that and into him, and see what my thoughts on him are, because I don't know any history. I only own Alibaba right now because it's over a 90% analyst rating on Robinhood, so that's why I own it on my M1 Pi. But other than that, I don't really know much about them, besides the fact that they're like a retail giant over in China. And I think that they're better than JD.com. And that they're doing a partnership, or looking to do a partnership with Starbucks. He basically runs the company. For sure. Well, hey, by all means, hey, you might as well just, if he's already doing the CEO work, like, might as well just graduate him up to the CEO level. I think he's the chief operating officer, correct? That means he pretty much does everything for the company then. So yeah. And so, what was I saying? M1 Pi, that not a straight transfer, but pretty close. I think it would have been a straight transfer if I would have not had money. So what I did was I made a deposit yesterday of $10, and so there was 10 additional dollars in my account. So what it did was pulled from that $10 to buy more of that stock. I think if there wasn't money in there, then it would have just been a complete straight transfer. But yeah. So it's kind of a learning experience, but I mean, what 30 cents is not all that much. I just wished that I would have bought. I thought at the same time it was going to buy other stock, but apparently it didn't do that. I don't understand why that didn't happen, but it is kind of whatever it is. It doesn't really make sense, but I probably just like make another deposit of $1 so that way I can invest into the actual market, into my stock buy. Who knows? But anyways, I think we're going to go ahead and wrap it up right there. It's getting close to about 11. I got to be up at 4 a.m. to catch a gaming stream, and then I'll be taking my parents to the airport in the morning. Also, they're flying over to Germany to visit my bro over there, who's serving in the military. So, and his family. So yeah, they're like super excited about that. So, Alibaba partnership with Russia already today. Dang. Wow. That might be some big news for Alibaba. We'll see. We'll see. It might be already priced into the stock, though. I don't know. Typically, things like that usually get priced in pretty quickly. You had auto invest off? No. That's the thing. I didn't have auto invest off. No, wait. I don't know. Let me check. I don't think I did. Yo, Justice, what's up, man? How's it going, dude? I think I go to what, settings? I don't think that you can do. Oh yeah, right here, settings. I think that you have to do it. I think you have to do it on the app. Yeah, $9.17. Yeah, buy orders must be greater than $10. So I don't know why that went that way, but Webull app is usually get my news. Yeah, I use Yahoo Finance mostly where I get my news for sure. It's on the front page. Yeah, auto invest is off. Should I just turn it on? Oh yeah, then I definitely had it off. So I just gotta turn it. Okay, so I'm gonna turn it back on. Now I've got it. Yeah, so I guess I had to turn it off. I'll show you. Yeah, on here, this right here, it was turned. It was on off. But I guess I want it on though. But right now it's only $9, so I think I'm just gonna go ahead and make another deposit real quick. I'm just gonna make an addition. I'm just gonna throw another $1 in there, transfer over another $1, so it'll hit tomorrow, and then I'll go ahead and buy. Yeah, right now my trash pie makes up 13%. Also, Zach's lunch special. Yep, and yes, oops, didn't mean to do that. Tried to click go to channel and I failed. What have you done, Gestures? You killed her. Wait. Oh, you deleted some. You put someone in timeout. I've done that before so many times too. I'll be like, go to channel, and then next thing you know, I end up like blocking the comment or something like that. Don't make me put you in timeout, boy. Dang. Team Mobile should be a hold. Yeah, right now it is. It's just in my trash pile. I'm holding it right now. Yeah. I'm not buying anymore, but I'm just holding it. That's why it's in my trash pile for a hold. So I'm holding both of these companies, which is kind of crazy that they both flipped. But I wonder, like, if my average cost per share dropped, you know? I don't know. Let's see if I can get like a... Yeah, so it is a... Like, I don't know. I still don't know, like... Like, so, look at it. There was only one trade that happened, right? 87 cents a Bayusan. That was the only trade that happened yesterday. But, like, in my pie, it doesn't show anything. Like, it doesn't literally show any... But maybe that's because it just started to have value in it, so it just started to track it. But there wasn't a sell, though. Yo, thanks for the host, man. I appreciate that. At the end, hashtag after hours with Coach. Hey, Coach, how about that guy that came by last night? Yo, that was pretty cool. Apple big day tomorrow. Oh, they're releasing the iPhone, huh? Or something like that. Or they're going to announce it or something. He will sell like 30 cents. You can't. Yeah. Big day for Apple for sure. Yeah. I did it for the gym. Stash versus M1 Finance. They're different. They're different, and I think that's... I like both. Wow, guys, my seat is... This seat is starting to drop, too. That's not good. They're different. I think... like logically looking at them, for me personally, when it comes down to the wire, the main selling point that I guess I would say might give M1 the advantage is because I would say every single portfolio that I run is similar to the way that M1 is set up. With the pie chart, it's very, very similar. Every single one is based upon portfolios, and then that and that. And then I just kind of rebalance as I go on. So for me, when it comes down to it, the freeness of M1 versus the $1 per month that I pay on Stash is kind of like the only like differentiating like I guess component is that M1 I don't pay for and Stash I pay $1 per month for. So in that regards, like it's kind of a bummer, but I'm really happy with Stash. I'm really happy with a lot of investments that I have on there. It's just kind of like they do charge $1 per month. And I think when it really comes down to it, people don't understand that. Like right now, I pay $12 a year on an account that's about $1,500. At I think January it was around $1,200. So basically about 1% of my account goes to Stash. Well, if I only generate 10% return, then I technically make 9%. Plus a 3% inflation rate, which comes to about 6%. And then we'll go ahead and say maybe transaction fees or something like that. So basically, or taxes, you're looking at maybe like a 4% overall return or something like that on that account, which it could have been like a 5% or something like that if I wasn't paying Stash 1%. So that's kind of the way that I look at it. But all the platforms that I cover, I absolutely love. I can't right now like say like I like this one versus that one. I just wish, as far as Stash goes, I wish that they would beef up their investment desktop platform, because right now it's really, I think it's really struggling, and it seems like they just came out with it to appease the people that want to use it on desktop, but it's literally not user friendly at all, and it's almost just too simple. Like, the app is far superior than the desktop platform, and it's kind of weird. Yeah, M1 can be confusing at times for sure, and that's kind of what I'm learning. Do I need to update anyone on M1 every now and then, like rebalancing on Acorns? You probably won't need to. As long as you're making regular deposits, you probably won't need to, because our accounts are so small that you probably won't need to. And plus, I don't know if it's an IRA account or if it's a taxable account, but when you sell, like, be expecting to pay taxes, you know what I'm saying? So, not my cup of tea for sure. Yeah, I mean, I like the thing that if I was a new investor looking to M1, I would just go to this research right here, and I would just go to expert pies, and I would just pick a pie. I would honestly, if I was to do it, like if I was a new investor setting up, I would just go here to this retirement pie and go to an aggressive 50 right here, 2050, and go ahead and boom, put that on there, add that to my portfolio, make it 100%, and just start putting money into there. And then from there, I would start adding different single stocks. It's taxable. Yeah, then I would just continue making those regular deposits and not worry so much about rebalancing. I don't know what specifically you're holding on M1, but if you're holding just like an expert pie or something like that, then like it's almost exactly the same as Acorns, and just dollar cost average, make those regular deposits. Yeah, additions and dividends rebalance on M1, correct. Yeah, so for instance, like right now, like see how my so just looking on here, like right now my stock should be at 84%, and right now it's only sitting at 72%. So when I make my $10 investment, it's not going to go into any other one of these accounts, maybe to a little bit of this BND fund, but almost all of it's going to go into this stock pie. And from there, it's more specifically going to go into Bilby, or yeah, what is it, Billy, or Alphabet, or Google. So it's going to go into these right here, and it won't go into anything else, because obviously these are completely out of balance. And so I could 250, I need that aggressive. What do you have in your big pie? 250. Yeah, it's not that my big pie gives me no ROI. Is it bad that my big pie gives me no ROI? I mean, that is kind of, you know, not that good, but just aggressive. Oh, so you're in here where you go to research, my bad, and go to research, expert pies, and you're in general investing, and then you're in the aggressive one right here. Yeah, so you just go to expert pies and go to this plan for retirement, and then it's down here. It's you just scroll down to 2050 aggressive. I think that you actually could probably get away with the 255 or something like that. Basically, you want it for whenever you plan on retiring, is like the idea. So like 260 might even be a better one for you. And it's just going, these are all it's just ETFs in that. So similar to Acorns, like on Acorns, we hold this one, the VOO fund. We also hold this one, this emerging markets one right here. We also hold this real estate one. I believe that we hold, it's not the Vanguard long-term bond, it's corporate and different bonds, but pretty much kind of the same idea. So it's a very, very diverse kind of pie. Anyways, this could be basically your whole entire portfolio. You wouldn't need really anything else. I want to retire in 5 years, coach. Good luck. You got to 10x that, man. 10x. Just aggressive, 65%. Then 10 and 5 and other stuff for sure. So that aggressive pie should have some ROI on it. I think I'll take a look real quick over the, like, so here's like the year to date. It's only changed 2%. So that could be possible that you haven't got that much of an ROI. Over the past month, it's done 20 cents. So that would make sense why it's not that big. Yeah, what happens this year doesn't really matter what happens in 20 to 30 years. Exactly, yeah. If it's got to or not, because some buns at M1. Yeah, it's hard once you get into picking your own single stocks, because with ETFs, like, I don't second guess myself that much, but with single stocks, like, I tend to second guess myself a whole lot more. I'm just giving people my money, hoping I get more back in 40 years. Then yeah, but you probably want some more ETFs than single stocks then. Network calculator. Yo, thanks for sharing the link. I appreciate that. Slash. Let me see if it opens. Page not found. Wow, okay. Watch this. I guarantee it opens now, though. What if I just get rid of this? It says it's not secure. But if I go to here, I can pull it up. Use this gestures to see how much you will need to retire in 5 years. The Intelligent Investor Best Book on Audible. 100%, man. A very, very good book. Love that book. Very, very good book. I think if you're looking to invest for yourself, it's a great book to read. A lot of good stuff in there. Here you go. Let's 10x this. We'll say that he does 40. What's the easy number? To do 40%. Let's see. 10 would be 10,000. 40,000. So half of that would be 20,000. So we'll say, yeah, 50,000. And this is the 10x right here, guys. He's investing current annual savings of 20,000. Current annual expenses. Current annual expenses would be, if he was paying another, it would have to be 10,000. And then current portfolio value, we'll just say it's nothing. Crunch the numbers. So basically, what is this? You can retire in 5.6 years with a savings rate of 80%. Annual expenses 10,000, annual savings 40,000, monthly expenses $833, monthly saving is $3,333. And there you go, man. So all you need to do is make $50,000. Oh, annual savings. Oh, that's supposed to be 20,000. My bad. So if you want to retire in 21 years, 21 and a half years, boom. There you go. Average, what is this? Average household savings rate. So India, man, they be saving a lot. They save 32% of their income. China saves 28%. The United Kingdom only saves 2%. Wow. We only save about 6%. Wow. That's crazy. 32K, boy. No 50K. That's why you got to get that YouTube grind, man. Get paid. It's going to take you 62 years, man. At a current savings rate of $2,000. Well, you would say that it's more than that. We'll say that's 10%. 51 years. So you're going to have to turn it up quite a bit, man. We'll say that you just go ahead and save like, let's say 20,000 still. 11 years, man. You have to save $25,000. UK has a national. Oh, okay, that makes sense. But that's, you know, man, that's not really that safe though. I wouldn't trust that. Show more options, increase the return. Oh, and your return on investment. We'll say that you're getting 7%. There you go. We'll say that you're doing really good with an 8%. We'll say that you're saving 10,000, so about a third. You could retire by the time that you're in 21 and a half years. That's not too bad. Cool. That's cool. I'm gonna have to go ahead and I think this is it, right? Okay, it's this entire link right here. Let me just go ahead and throw this up on the Discord real quick. Right there. We'll just put it right there for now. But yeah, cool. Awesome stuff, man. Love on the news, boys. I'm grinding. What? Let's go. Yes, please. Anyways, guys, we're going to go ahead and end stream right there. I know I was talking about I'll be 21 and a half years. I'll be 42. Let's get it. There you go, man. Especially if you're making that income on YouTube also. Boom, boy. Boom. Boom. Well, and then it's just save all that money, man, that you make from YouTube or something like that. If you don't need it, you know what I'm saying? And then you can retire faster. Anyways, we're going to go ahead and leave right there, guys. Thank you all for hanging out. I really appreciate it. Tomorrow won't be live, unfortunately. It's my night off. I go to, we have church group, and so I'll be busy with that. But I'll be back on live streaming investment talk on Thursday night. So that should be fun, I hope. So be on the lookout for that. Me and Jay will probably do a video, and then I'll probably have a video also. So it might be like a double header. We'll see. Tomorrow I'll be live in the morning doing some streaming stuff. Thanks for the stream, man. You're welcome. I live stream 5 days a week, specifically investment talk. So feel free to join. Usually it's around the same time. Actually, this is a little bit later than normal. Usually I don't stream at 11:15 p.m. I try to go live at like 8 or 9 o'clock. It's been about more 9 o'clock. But this one obviously happened a little bit late. We had a meeting tonight, like I said. So God is good. Yes, he is. Yeah, man, I expect 10K a year from YouTube. Heck, I invested all in Tesla. Dang. I retire or bust. Yes. So I'll be live tomorrow, probably playing Smite in the morning. And then Thursday morning, obviously, I'll be doing some gaming. It'll be Throwback Thursday for some StarCraft 1. The game is 20 years old. So if you want, feel free to check those out. And then I'll just be posting some investing videos. I'll have 2 investing videos tomorrow, and then 1 investing video on Thursday also. So anyways, guys, thank you for hanging out. Thanks for chilling. I'll see you all hopefully tomorrow morning, but if not, Thursday night. Anyways, thank you for watching. I really appreciate it. Peace out.
Fill the frame. They say we're lost without aim. Today the stars will lead red. Soon blue will guide us instead. I look at stars fill the frame. They say we're lost without aim. never too late to admit when you're on. Turn a new leaf, see a new dawn. The time to decide has come and gone. Just give me a chance, we can carry on. I've made my choice, these drums of your voice, they run through my head as I remember the day. Stay in this moment.